Hello everyone. In today's video, I would like to discuss with you the Kier Group and their recent capital raise, where basically they're looking at raising, say, nearly 270 million pound. Right. So in this video, I'd like to chat to you about whether or not it's a good idea to participate in this offering to completely sell out of your Kier Group shares or just stay put and do nothing. So what we're gonna do is let's open this up real quick. Right, for those of you that are not sure, this is the proposal letter straight from the Kier website, and from which, yeah, we can see it's my bad. It's 241 million. That's how much they are looking to raise from this public offering. The whole sum will total 351. That difference between 241 to 351, those 110, they're coming from the sale of the branch of Kier Group called Kier Living, which is, yeah, basically part of the business that will no longer exist. So I don't know how is this a positive thing, but okay. Yeah, from the letter we can see that they're raising those 240 million to increase financial headroom available to Kier Group, allowing for more efficient working capital management in the current environment. I don't know how is this. That's a lie. It's absolute nonsense, because further down we are seeing, we'll see all the broken down payments they're going to be making, which is so much debt, and it's all debt since 2017. They're paying back since 2012, and they are also buying time, extending current debt to 2025. I don't even know what headroom they're talking about when they're gonna have only 16 million left over. But that's not the biggest issue which I'm finding in the whole situation. So if I open up real quick the market watch, so if we find where Kier Group is, and then we see something shocking. So the market cap of the whole company is 330 million. They're looking to raise 240 million. Right. I think that's a really negative thing. As in, that means basically they've got 290 million shares available to us to buy. So basically, they're diluting the shares so much, they're nearly doubling up the shares. So how would that affect the share price? If the share at the minute is, as you can see, is 110 pence or £1.10, so we're looking at 55p a share. Okay, fair enough. So you'd expect this offering to be offered to the current shareholders at a bonus price, so that you'd expect, okay, so it's not going to be 55, so expecting, okay, I'll be a discount, you're expecting a 40p or something like that a share. Yeah, I think that will sound fair, but hold your horses, that's not what the case is. So if I quickly pull up the message on trading 212 for you guys. So what do we have on 212? It says basically I used to hold 82 I used 82 stocks before this came official, so my rights are to buy 82 additional stocks, unfortunately on the 85p each, which from the official letter on the Kier website, it was saying is going to be coming at 17% discount on the price it was uh, whenever, um, I think on the 13th of the 5th. So what does that mean? So I'm gonna have to pay 85p a share. and the fair value of the share is, as we said, about 55p, without any other big sell-offs when this actually happens, because we are going to have those sell-offs. So that's why I sold my shares, I think £1.20 long before this. But in my opinion, everybody should sell that off, because if they say they're looking at that price from the 13th of the 5th is going to be 85p, after all this is finalized, the 7th by the 7th of June, we're looking at large share dilution, nearly twice the amount of shares that are available. And honestly, I'll be surprised if the cost of a share is above 60p. But yet again, yeah, so I wouldn't advise buying any more shares. I wouldn't advise uh, taking advantage of this offering for all these current Kier shareholders. Just sell it all off and wait. I'll have a look at the stock again after the 7th of June. I'll keep an eye on it. If it drops well below 55p, if it drops about 45p, I'll be loading the boat with it. Yeah, because they also said in the letter that they're keeping dividend and everything, but that this is not really fair price per share. So basically, they're putting all the burden, all the debt of the company on the shareholders. It's not the company getting rid of the actual debt. Basically, they're passing it over to the shareholders. So yeah, well, that's my opinion. But yet again, I'm not a financial advisor or anything like that. So you do your due diligence and yeah, have fun. Be careful. Make a lot of money. If you got any questions, please drop us a comment box down below. If you like the video as well, just give us a like, obviously. Subscribe to the channel for more useful information. And that'll be it. I shall now see you in the next one.